Welcome to everyone. In this week video you will learn how powerful and profitable the cycles are. You will also learn how to use them to trade the stock market to increase your profits. This week video will cover the S&P 500 for the week of September 16, 2024. Before we start, make sure you read carefully the disclaimer. This video has been taped on Friday in the mid-trading day. Let's see what's happened since my last update on September 2nd. Let's start with the 10-day cycle. On August 30th, the S&P 500 crossed below his cycle line at 5,600 for a potential target at 55.48. The target has been met, and on September 6th, the S&P 500 made a low at 54.02. On Thursday, September 12th, the S&P 500 crossed back above his cycle line at 5,500 for a potential upside target at 55.97. A rally of 97 points or 1.77%. On the same day, the S&P 500 met his target. The success rate is 100%, meaning trading each signal was successful. The cycle trend is down for this week. The 20 days cycle. Since the last update, the S&P 500 crossed below his cycle line once, on September 3rd at 56.07 for a potential target at 55.60. Or 54 points. The target has been met and even exceed. On August 14th, the S&P 500 crossed back above his cycle line at 54.20. For an upside potential target at 5,720, 300 points or 5.53% of potential profits. On August 26th, the 56.51.62 high was 69 points or 1.2% below his target. The fact that the market missed his target is a warning. Some bearishness is coming into the market. The September 6th low is the 20-day cycle low, and the next low is expected on September 28th. What's next? We expect the S&P 500 crossing above his cycle line and provide an upside target. On Friday 13, the S&P 500 crossed above it at 55.85, providing an upside target at 57.67, a new all-time high. To validate this signal, we have to wait for a confirmation. Here the cycle for this week and their potential targets. The cycle trend for this week is up, and the success rate for the 20-day cycle is 87%. The 40 days cycle. On my last update, I was expected the S&P 500 to find support on his 40-day cycle line to form his 40-day cycle low. This low was expected on September 8th. On September 6th, the S&P 500 crossed below his cycle line at 55.37 and 55.13. For a downside target zone between 54.23 and 53.75. Or 2.05 and 2.51% of potential profits. The target has been met the same day with a low at 54.02. And at the same time the 40 days low is formed, just 2 days early than expected. The previous upside target between 57.86 and 57.64 have not been met. Since we have a crossing back below his cycle line before the targets have been met. This is another sign of weakness in the market. And the targets are not valid anymore. Technically, the market should meet his target at his peak formation. Since the 40-day cycle's low has formed, I now can draw the 40-day cycle trend line, which will help us to identify the next 80-day cycle peak. If the 40-day cycle low is confirmed, the cycle trend for this week is up. Here the cycle line for this week and their potential upside targets. The success rate, trading this cycle, is 85%. The 80 days cycle. On August 26th, the S&P 500 crossed above his cycle line at 56.02, providing a potential upside target at 60.84, a new all-time high. In my last update I mentioned, the crossing was not very powerful. This week action on the S&P 500 confirmed there is some weakness into the market. The S&P 500 trade on his cycle line without crossing below. It is very important for the S&P 500 to stay above his cycle lines. A crossing below them will mean the market start to turn bearish. For now the 60.84 upside target still valid until the market cross below his cycle lines without meeting it. If that happen, it will be bearish. If the S&P 500 cross below his 40-day cycle trend line, first call it VTL. For more details, I recommend to watch my series of video, Secrets Behind the Cycles. Or to go to my new website, I posted the link in the description below. The crossing will confirm the 80-day cycle peak has formed or he is in formation. We have to keep a close eye where the peak will form compared to peak of the cycle. The peak forming on the left side, or left translation, will confirm some bearishness, and we can expect a sharp correction for the 80-day cycle formation, expected on October 15th. If it's happened on the right side, we can expect a moderate correction. Technically, at the time of this 80 days low formation, the S&P 500 supposed to find support on his cycle lines. A crossing below will confirm the market turned bearish, at least on the short term. Here are the cycle lines and their potential downside targets. The cycle trend is still up, and the success rate is 100%. The 20-week cycle. This week the S&P 500 trade right on his line. A crossing below will definitely confirm the coming bearishness in the market. The 20 weeks and the 40 weeks cycle lines are a major support lines. The last 20 weeks low was on August 5th. The next one is expected on the first week of December. The cycle line and the potential target if the S&P 500 cross below this week. The 20-week cycle trend is still up and the success rate is 100%. In conclusion, we start to see weakness in the overall market. We have to watch carefully the market reaction with the 80 days and 20-week cycle. As mentioned above, a crossing below them will confirm the bear is around. Why we start to have a weakness in the market? In a future post on my new website, I posted the link in the description below. I will analyze in details the possible reason of the S&P 500 weakness, with a long-term analysis. If you like this video, please share with your friends, click on the like button and subscribe, to make sure you don't miss any future important videos. This is the end of this week's video. Thank you for following me.